The 2024 elections are over, and today we're here to talk about the stock market and how it reacts to each election. My name is Bradley Valentine from Freedom Finances. I'm here to talk to you about the elections and how stock markets react the day after elections. A lot of people think that there's a lot of politics, a lot of ideology that comes to play with the stock market. And after doing some research, I wanted to show you what I found and how you can view the stock market the day after the election. So let's get into it. Here we have the S&P 500. We have the day before each election, the election day, and the day after close of each election day. What we're going to do is we're going to go over the results each day after the election and see how the stock market changes. This is the S&P this week. On Monday, we had a 57.12 close. On Tuesday, the day of the election, 57.82, so it went up that day. And on close, the day after, it actually went up about $200 or so, which is a 2.53% change, so a 2.5 point change when President Trump was elected. Now, some of you may be thinking, okay, it looks like the stock market favors someone like President Trump. However, I think there's some more information to look at before we actually make those conclusions. So let's go back 4 years and see what happened. We can see when President Biden was elected, it actually went up about 2.2 points, which means that Biden's election, which happened during the COVID crisis, mind you, actually had a big increase in the stock market. And I say big increase, it's actually not that huge. It's 2.2 points. That's usually a little bit more than it would be on a good day, but it has gone up that much in one day. These are just a little bit higher percentage points each year. Let's go back again. The first time President Trump was elected at 1.11% change. So we can see another positive reaction on the stock market. However, it really wasn't that much of a reaction at all. Now let's go back to President Obama when he was elected 2 times. His second time he was elected, the stock market actually went down 2.37%. That's from close the election day, which was 1,428, to close the next day 1,394. So you may be thinking, haha, I knew it. The last few elections, the stock market actually favors someone like Trump. But then you say, well, it also went up during Biden. So does it really matter? Does it matter if it's a Republican or a Democrat? Well, let's go into that a little bit more. Let's look at some more data before we actually draw some conclusions. One thing to think about is, yes, while the election caused it to drop 2.37% the next day, it actually went up quite a bit from the day it was closed on Obama's final election to the day it closed the day before Trump's election, 21-31. So quite an increase there. The stock market was actually booming under Obama as well. So let's go back to Obama's first election. The first time he was elected, this is where we see the biggest change percentage of any of our last 36 years or so from any president. We see a negative 5.27 percentage drop in the stock market the day after President Obama was elected the very first time. Now, if you look at these 2 years put together, the day after President Obama was elected is actually pretty negative on the stock market. Again, we want to look at from the day President Obama was first elected, the S&P was around $952, to the day President Trump was elected, we have $2,131. So more than double. It went up more than 100% under Obama's terms. But one thing to think about is Obama actually got elected in the middle of the mortgage crisis, which was a huge worldwide crisis that actually happened under Bush's term, and there was a lot to fix within the economy. Let's go take a look at President Bush II. This is his second term. The second time he was elected in 2004, the stock market went up 1.12%. Again, not that much of an increase, but it did go up under his second term. The first time he was elected was a negative 1.58% under Bush II's term. So the first time President Bush was elected, the stock market reacted negatively. Now, there was a lot going on in the year 2000. I know a lot of people have thought the last 3 elections have been pretty wild, but actually the last 3 elections aren't too unique, especially in the fact that there's a lot of stuff going on with legal cases in Florida and recounts with President Bush the first time around. So it wasn't a clean sweep victory. So we don't know if the stock market cared about that. We don't know if investors were selling off or if businesses were struggling at that time. It's just something to think about. So overall, during Bush's 2 terms, the stock market had an overall negative effect, just like President Obama. So we go back to President Clinton. The second time he was elected, there was a positive reaction on the stock market of 1.46%. The first time President Clinton was elected, it was negative 0.67%. So it definitely went down the first time, went up the second time. Again, no real conclusion here. Overall, a positive impact the day after President Clinton was elected the first 2 times. Overall, a positive reaction to the stock market the 2 times President Clinton was elected. Finally, we have President Bush won his first election. This is the last data I have for the S&P. The first time President Bush was elected, the only time President Bush won was elected, there was a negative stock market reaction on the S&P. So let's take a look at the total change, because overall we see some green, we see some red, some Democrat, some Republican, but overall we have a negative 0.21% the day after the election. That's really not that huge of a change, if we're being honest. Nothing crazy goes on after the election. Sometimes people love it, sometimes people don't. We ask questions like, do people care about economic policy? Do investors care about potential economic policies, whether they're liberal or conservative? Overall, we can see not really. It doesn't really matter. Just for fun, I checked to see the Republican versus the Democrat average. Republicans had an average of 0.50%, which means after the stock market, on average, after Bush 2 twice, Trump twice, the reaction of the stock market was just barely positive. And for Democrats, for Clinton, Obama, and Biden, just barely negative. A lot of that comes from the Obama first election when it was negative 0.527%. If we change that, it'll probably be closer to what Republicans have. Let's take a look at the Dow Jones Industrial Average and see if there's much of a change here. So let's take a look at Trump's second election. This was actually yesterday. On close, it was up 3.57%, which was the highest of any day from the Dow Jones or S&P overall. So a pretty good day on the stock market yesterday after Donald Trump was elected for the second time. Now, when Biden was elected for the second time, we actually see a 1.34% increase in the stock market, so another positive reaction. The first time Trump was elected, 1.81%. So again, overall, positive reactions the last 3 elections. During President Obama, we see almost exactly the same as we did in the S&P. Overall, a very negative reaction, especially on the first time. Again, we have to think about the mortgage crisis going on in 2008, which happened during the Bush administration. But we can actually see, once again, let's take a look at close on the day after Obama was elected, 91.31 for the Dow Jones Industrial Average. And the day before Trump was elected for the first time, on the last day that Obama was reigning as the Democratic nominee, we have 18,000. So it essentially doubled during Obama's terms. We have Bush 2. His elections, the second time he was elected, a positive 1.01%, same as last time, the first time he was elected, minus 4.41% for President Bush. President Clinton, the second time he was elected, another positive reaction. The first time he was elected, another negative reaction. Essentially the same exact thing that we saw in the S&P, except the overall change was barely positive at 0.06%. So really even less on the Dow Jones Industrial Average, which has a higher amount in the index overall, which means that the changes are more accurate. We can really see that this 0.06% really doesn't mean much. Again, Republicans are positive, Democrats are negative. Overall, a lot of that comes from Obama's 2 terms and especially the mortgage crisis. But overall, not much of a change. So there are some conclusions we can take away. And number one is do not make any investment decisions based on who you think will become the president. For one, you don't know who's going to be the president. For two, you don't know how the stock market's going to react. If someone tells you differently, if they tell you, I think this person's going to become the president and therefore the stock market is reacting this way, they're lying to you. We've seen the evidence ourselves. We've seen the evidence in the polls that they don't really reflect on who the current president is going to become. They also don't reflect on what the market is going to become after this person gets elected. It's impossible to know, so stay away from this sort of thought process. Number two is the market trends upwards, so start your investments early and don't try to time the market. If you try to time the market based on politics, ideology, Democrat versus Republican, you're likely going to lose. No one can really predict the market, so it's difficult to understand. Is the market going to go up? Is it going to go down based on what's going on within the next couple days? Sometimes it might be easy to understand that, yes, over the next few days, the market may have an upward trend or a downward trend, but generally you're still guessing if that's how you're looking at the market. So when you know the market trends upward, start soon. Don't try to time the market. And finally, for number three, let your investments grow with time. Don't try to day trade off of political events. If you do this, you're likely going to lose. You're going to allow emotions to take control of your decisions and you're going to lose money. A lot of people think that the presidential candidate or the candidate that they're voting for is going to help or hurt them. So then they make the decision based off who they think is going to win or who they like or who they don't like. And all of a sudden, you're going to be losing hundreds, if not thousands of dollars because of a political candidate, because of your emotions, because of your political ideology. So simply let your investments grow with time, use compound interest to your benefit, and don't try to day trade, don't try to make decisions off of political events. You can find some amazing resources at freedomfinances.org. We have a lot of information from news, financial literacy, stocks and markets, financial resources, and even career resources. We have news about Tesla stock, job news, housing market, and a lot of other news. We also have financial literacy, including a financial dictionary, how to understand compound interest, and how to use the 4% rule once you retire. We have information on stocks and markets, including news, as well as information about the S&P and how to understand it and the history of the S&P. And finally, we have career resources for anyone who is looking to make their job even better than before, or if you're looking for a new job or want help on resume or interviews, we have all that information for you. Once again, my name is Bradley Valentine. I hope you had a great day and I hope you learned at least a thing or two.